Hello everyone, this is Mark, Fractals and Forks on Sunday, August 13th, 2017. So, the week ahead, let's first look at the economic calendar. Wait a minute, let me first give a big welcome to all the new subscribers. Normally this video is something I do every week. It's been a few weeks. We've been very busy, but I'm going to pick that up again, and I would really love to do a webinar if some people could attend, because I've been trying to do it a few times and nobody seemed to have the time to join, and it's kind of lonely if I have to talk to myself. But anyway, first things first, let's have a quick look. I put this Forex heat map on the website, if it comes up. I don't know yet how useful it will be, but we'll see during this week. I will keep an eye on it, and maybe I'll refer to it on Twitter if it's something interesting to note. I think this is just based on if this is updated live, then yeah, that could be interesting. So let's have a look at the economic calendar for next week. There's a few things that are quite interesting, so let's filter the results to just the important things. So first of all, in a few hours, New Zealand retail sales, the consensus is 0.7% quarter over quarter, so that's even if it just reaches the consensus, I do think that the Kiwi could go down more. So that's my assumption, and I will show you some pairs where I think that well, obviously New Zealand dollar related pairs that could be interesting. Then we have GDP from Japan. It looks like a beat, so that could have influence too. It's gonna be an important night, because then we've got industrial production of China at 4 a.m. My time, that is. So then on Tuesday we got the meeting minutes from Australia. Don't think that will have a big impact. And then CPI of the UK. That will be a mover in my opinion. Then we have retail sales in the States. Wednesday, building permits, FOMC minutes. And then we have, of course, the unemployment rate and employment change in Australia on Thursday morning, and that will be a big market mover. And it looks like it's beating, so that will be interesting too. And then if we get good numbers of a CPI on Tuesday, that could get knocked down by retail sales on Thursday for the UK. That's my assessment. And another Friday where there's Canada numbers and there's no US numbers. So the loonie could make some movements on a Friday. So let's be prepared for that. All right. Yeah, and then what I usually do is start with the DXY. Just quickly going with the monthly, weekly, daily. I'm not going to do lower time frames. So I do think that the DXY has still a lot more to go down. 89.92, which is a 38.2 from this move down. That's where I expect a reaction, because that's also the 2009 high here. 89.28 or something. So there's actually nothing. If we close the month in the black, so to speak, with a black candle, this thing could go in a free fall, and we could even exceed those targets and go lower. So let's look at a weekly. This fork is a bit skew, so I don't like it, but I do like it because if you look here, you know, resistance here, thought we would have a zoom and retest and we go higher. Didn't happen. There were like weekly reversals here twice, and then the median line was resistance, and here it couldn't even reach the median line anymore. So that was actually a really good sign that you know, there was exhaustion in the dollar index. So since then we've been dropping. The lower parallel here in 1-2 weeks around 91.70, and the 38.2 here 91.17 could bring some pause. Maybe we'll, you know, resistance now and bearish invalidation, so to speak, is 94.50, which is the close here, and a weekly reversal level. So as long as we stay under 94.50, the lower parallel is bound to be hit, and like I said, on a monthly maybe lower. Quick look at the daily. We didn't, so let me zoom in a little bit. We actually never closed above the median line. We have some spikes above it. We never closed above the median line, and now it was rejected and we're going down again. So a close below 92.73 would really validate the bearish idea that I have. And just quickly, for those that, you know, are new to trading in the dollar index, just have a look at the Wikipedia entry about the dollar index. You can see the weighting, 57.6% is the euro. But anyway, so I just wanted to make clear, let's say if the euro dollar goes up 1% and all the other components of the dollar index go down 1%, then the dollar index still goes down. So I just wanted to make that clear. If you're gonna use the dollar index for your bias for dollar strength, of course it's an indication, but it doesn't mean that, let's say, the euro goes up and the pound can go down, of course, against the dollar, because obviously pairs don't just move because of one currency. It's a pair. So I just want you to be aware of that. Okay, then let's go to euro dollar. So I'll go over the majors first, and then we'll look at some crosses. So this is my monthly chart, and it's been really a piece of beauty here. So like I've said in a tweet, it's like, you know, if you would look at this on an hourly chart, there's no doubt in your mind or my mind that the 50% would be hit as a retracement level from here to here. So why not on a monthly? And that level is 21.67. So I do think, well, you know, 120, what was my, well, we'll see that. I thought 120.60 or something, but we could shoot up to here before we get any meaningful pullback. But on a monthly, basically we're still below 60 RSI So there's still room to go up. RSI just means strength, right? So strength can go on for months. So let's look at a weekly. So here's the weekly. We're still in a downtrending market, unless, you know, we go higher than 130 or 128. What is interesting here is this fork, obviously, and I put the median line in red. So that's actually the bullish invalidation. If we close below this median line, this week it's gonna be like 116.70. If we close the week below 116.70, it doesn't really mean that you can start getting bearish to euro. The move has been going on for like 9 months now, so it's really strong. And yeah, you know, all the fundamentals and the dollar weakness, and I can't even, you know, get started about the debt ceiling that's looming in September, and you know, they can't get health care, they can't get the repeal and replace of Obamacare done, and on that hinges all the tax reductions that they had in mind. It's all depending on that. So it's actually a real mess, and if the Fed is still thinking about you know, taking care of their balance sheet, it's all just, you know, very, very dollar bearish in general. So what are we looking at? Like I said, I thought it was 120, but it is 119.98, which is a gap close from 2014 in December. And the next level, 121.80, which would, you know, so what is this? This is a, well, the 50%. Why is this different? It's probably because of the spikes here. I must have drawn it differently, but anyway, it's just a couple of pips, so it doesn't really matter. It's 10 pips difference. So let me put a little circle target here. So let's say this is a weekly. Let's say we reach this, yeah, before the end of the month. So let's say the 28th. So we should be at 121.70 by then, my opinion. Quick look at the daily. I know this could become a very long video because there's a lot of pairs to cover. So this is the daily. I like year open levels, so that could also be a target before the end of this month. Let's look at here. Oh, this was just a beauty, you know. I mean, the old, let's say the old original fork, there was a breakout, it was support here, so the breakouts here, look, it was support here, and we're going up. So this is like textbook fork stuff. What else about the euro? Yeah, that's it. I mean, as long as it's going up, why would you try to fight it? You know what I mean? Everybody would love to have this going to this median line, actually. You know, 116. If everybody wants it, it's not going to do it, and the move is too strong. It will just keep going, just like you know, back in 2014, everybody was like, oh yeah, I'm gonna long it again, and I'm gonna long it again, and I'm gonna long it again, and you know, it just kept falling. And this is what's going to happen right now. It's just going to keep going. What changed? You know, I mean, there's nothing in the last 8 months that would give me any reason for the euro dollar to go down again. Not one. All right, so let's have a look at what's the next one. Let's look at dollar yen. And I hope this is recording. Otherwise I'll be talking an hour to myself and I'm gonna really hate that. So dollar yen, on a monthly, you know, we bounced off this 50%, 108.72. It's kind of precise. The low was 108.72.7, and the 50% is 108.72.5. So close enough, right? I've been actually bullish dollar yen in my mind, yeah, for a long time. Now, are we going to turn here? I don't know. It all depends on, nothing happened this weekend, so nothing with Guam, or, you know, no more rockets launched by North Korea. The market is gonna get tired of, you know, being excited about a potential war or whatever, or preparing for a war. It's still gonna be in everybody's, you know, in the back of their heads, but I think it's gonna ease down. Now, I'm actually very bearish the yen. So if you hear that that Japan will probably have to stop buying the bonds, the JGBs, in next year, in the middle of next year, which is about, you know, a little over 9 months, 10 months from now, or I can't count. It's 12 months. But just like the euro, when there was these rumors about tapering back in December and January, that's when the euro dollar started going up. Now, if Japan is going to stop buying, that's going to be yen negative, right? So either, you know, this was an ideal place to go long, and, you know, I didn't, or it's gonna be like, let's say 100, 200 pips lower. And why am I saying this? And let's look at the weekly. It's because of this 61.8. So let me zoom out. So, you know, these are all just parallels, which have been pretty nice, you know, to define support and resistance. So let's zoom in, and then we have the low here from April and a 61.8 retracement at 107.98. Now, ideally, in my opinion, we go down still 100 pips, 120 pips, maybe, to this red sliding parallel, and then we go up. A quick look at the daily, and there we have the same, you know, the same idea that I just showed you on the weekly. If we just go down here and test the low again of the April low, and then go up, that would be a strategy that I'm entertaining right now. I said I was going to go to all the majors first, but I'm actually not. So let's have a quick look to the weeklies, to the crosses, the other yen crosses, and let's look at the Aussie yen first. And here's the same scenario, right? So yen strength for another week or so, and this would be a level in Aussie yen, 85. 115 pips from here to go long, and the weekly 55 SMA is also turning up, so this could be a level to go long with a stop, you know, 125 pip stop or something, because I do think that Aussie yen is going up. Another reason is you see this fork, you know, a breakout, maybe a retest here. That's a bit lower, so we're gonna be watching this very, very closely when we get to 85. So that would be a buying opportunity. Then we have, obviously, if we look at Aussie yen, we got to look at Kiwi yen. The same scenario here. Here it's actually a lot clearer. I got two forks, but actually they build the same slope, right? And that's what I like. It's all about slope. It's all about price action around this slope, and it was resistance here. You know, I could draw another sliding parallel. It would be resistance here in May, and it's been trying to go up. You know, it's been trying to break this 84 level. So one time, then we went down, tried it again, went down, tried it again, went down, tried it again, and now we're here again. And now we're going to get the support of the 55 SMA, you know, to really get this going to the upside. So we had Aussie yen, Kiwi yen, and now we got my favorite, it's CAD yen. Same scenario. You know, down and then up. It's actually I really like this, and you know, if you're new, I've showed you this one. This is, you know, and Andy is obviously better at the fractal stuff than I am, but if we take this one, you know, we're basically here, and then we get the big move up, right? And which could go above 100, and I'm actually looking for that. You know, if the CAD, and we'll look at the CAD in a minute, if that really gets going and gets stronger a whole lot more, and the scenario about the weakening yen is gonna work out, then obviously CAD yen is gonna go to the moon, right? Okay, so let's not get ahead of ourselves. I mean, looking at these higher time frames, keep it in the back of your head. Know that it's, you know, it's possible. Don't just, you know, in a few hours, don't just go buy Aussie yen and Kiwi yen and CAD yen, unless you have a lot of money and you know what you're doing, and your position sizing is you know, relative to your account size, then sure, why not? I do think that, and I've got to check something. I do think that, for instance, this CAD yen has got a huge potential. So let me quickly look where a retracement level would come in, and so the 50% is 85.15, and the 61 is 84. So, you know, if we could get below 85, that would be an opportunity to really start getting longs in CAD yen. I was hoping that the median line would hold here, but it didn't. So all right, so let's go back to the majors, and obviously let's look at dollar CAD. We had a bit of a retrace this month. should be at resistance. This resistance, I thought it would be a little bit higher, like 2780s or something. I do think that we're ready to get some more downside. So more CAD strength, and you know, by in 2 years we should be 110. That wouldn't be impossible. Okay, let's look at a weekly. So as I said, the fork, this fork with the sliding parallel here, we broke it, we're retesting it, and obviously we peeked through it, but the idea is now that there's another wave down, so to speak. If this is 1, 2, 3, 4, and then we got a 5th wave down, which could be another 300 pips down or something. A level to look at is 123.35, which is a weekly reversal level around here, and probably a high volume level too. So that will be, you know, the first circle is always the first target, and what happens afterwards is just, you know, well, everything is just guessing basically, but you know, it's all about calculated guesses, and you know, looking at all the pairs and see how they move against and with each other, and price action. So let's look at the daily. So we had a daily reversal on Friday. Too bad it's on a Friday, because I don't like them on Fridays. But it's a good indication, and it's an outside day reversal. Now that I just noticed it, I didn't even know that it's an outside day reversal. So that's a very bearish sign. So look for more dollar CAD weakness in the days ahead, and that 123, yeah, mid 123 levels, that would be also you know, the parallel here from the lows from 2012. So this is gonna be a really important level. All right. Okay, then let's look at Aussie. So like I said, I'm still very bullish Aussie. We're having a little bit of a pullback, which could still be going down a little bit more, like 77, 70, 777 would be nice, and then up. The same with Kiwi. We'll see that in a minute. So that was a monthly, right? So we still have 2 weeks. Then a weekly. I've got this level, the green level. I made this screen a few weeks ago to say, look, if we break that, then it's a validated breakout. And what we did is it broke out, and you know, we're trying to test it again. So it could be that we get a test. If we don't close below it, that would be a good sign, and then we can go back to the median line here, and be on our way to 85 and maybe higher. The daily. So I'm just, you know, I'm just trying to convey how I'm thinking. It doesn't mean that this is all going to happen, but it would be nice, because then I can taunt everybody on Twitter with this video. So On the daily, the same thing. Obviously, we tested this fib, and either we just go down a little bit more, like I said, 77.65 in this case. That's why I drew this line. A bounce off there, and then to the median line, and up and away she goes. So like a bullish invalidation level would be 77.50s approximately. If we go lower than 77, then yeah, then the whole idea yeah, will be null and void. So, well, let's have a quick look now that we covered Aussie and Kiwi. Let's look at Aussie Kiwi. I'm really focused on this for reasons that you well know, because I posted it on Twitter. We're having two really bullish months right now, right? So we have 2 weeks left. A close above 109.04, you know, would be the highest close in more than a year. So we're getting close to it. RSI is trying to get above 50. If we put a little, you know, that I like doing that, like a horizontal level here, you know, it's 49.87. So anyway, if we can get RSI above 50, then this thing is off to the races. It's been consolidating long enough, and everybody thought, you know, oh, head and shoulders here, and it's off, and it's still, you know, not really. It wants to, but it can't, and it has to stop. It just has to go. And I think 2017, as we have seen the big moves in all some other, well, in almost in all currency pairs this year, Aussie Kiwi is not going to be an exception. This is gonna take off, or it's gonna make me broke. No, I'm kidding. It's all money management, obviously, but you can't really make a lot of money if you don't risk a bit, right? So Aussie Kiwi on the weekly, and this is actually what I like. We really broke this last boundary, so to speak, this last sliding parallel that I drew. We broke it. We're still not above it, but maybe this week we will. So once we get above what is this fib level, is 109.11, and we close above that, then the median line is the next thing, and that's 111.40 in the beginning of September. So it's still, that's 400, well, 300 and something pips, with a pair like the Aussie dollar, the Aussie Kiwi. Obviously you can afford to put some more on, because it's not really an expensive pair to play, and you can put more lots on. So you know, you could make some serious dosh here, as Andy always says. Let's quickly look at the daily, and I hope I'm not losing track of all the pairs that I already covered. Yeah, so this fork, okay, not really, you know, the way it's supposed to be drawn, but the median line has been quite okay. It's within the confines of this, you know, the blue striped lines, a channel, whatever you want to call it, and then this fork, which I think is nice. It was support here. We tried to get to the median line, we didn't. We pulled back, and I think that we're now on our way to the median line, which would be a little bit above this 88.6 before we could get another pullback and then go higher. So very interesting times ahead, if it all works out, obviously. Okay, so another major, and it's the cable. Ugh, the stupid cable. Cable is I have no idea. I'm still very bullish on the cable, but this pullback now, this was worrying me. On Friday we did go up what, 50 pips, 60 pips, so we had actually a pretty decent close on the daily, but the monthly candle, yeah, doesn't really look good, right? Unless we find support here, and you know how much I like RSI to find support on 40, so we could you know, be in for, and this RSI is only set for the month when the month closes, so we could still be going up here. So let's have a look at a weekly. All right, a weekly, yeah, like I said, 2 weeks down. Normally we had so many weeks up, down, up, down, up, down, up, down, and we actually broke the and obviously, since I mentioned it, that's probably why it broke. So we didn't have an up week last week, and yeah, that's worrying. Let's see what next week brings. The only positive thing is if we get this RSI trend line, you know, we're kind of breaking it, but if we get an up week next week, and especially since the move on Friday could continue to go up, that would bring it back into some bullish territory, but that would really mean we need to break 131. If we go to 131 and we turn around, then it's probably gonna mean it needs to retest the 55 weekly. I'm not saying way down here, 127. I think that's a little bit too deep, but you know, 128.50 or something, and then go up. So we're close to a breakout of the pound. I'm pretty sure of it. It's just not gonna be real easy. Yeah, let's look at the daily. So this Friday, same thing here, you know, the last sliding parallel, we broke out, we came back to test it, and we didn't really go down here, one low 29s, but we turned around on Friday. We turned around on this let's call it a trend line on RSI. It was support here in May and support in July, and now it's maybe support here in August. So let's have a look at what pound does. I'm thinking it will go up. The move on Friday was probably, and it's an outside day move too, by the way, now that I see it. So that's that could be a really bullish sign. Okay, so we got all the majors. We went through that and that and that. Yes, now let's look at pound NZD. So if the pound's going up and and the Kiwi's going down because of the the bad numbers tonight, then that would mean pound NZD is finally going to go up. But I've been saying that for so many times, it's probably boring you. But I still think it will. We got kind of a bullish signature on RSI. We're above 50. We're at 51 now. We had this nice move to the upside. Then on Friday we retraced it a little bit. We're above the 200 MA. I'm just going to look at the dailies. We're above the 200 MA. I think that's going to continue to provide support from now on. So this week I'm really looking for pound Kiwi to go up. Where can we go? It can be a mover, you know. I mean, 200-300 pips in a day, that's nothing for this pair. So 1.81 is definitely a possibility, which is you know, equal legs up from this move. And once we get there, you know, it's gonna look really constructive. You know, let's try to make this a little bit as a fork. So we're gonna draw a median line, and you know, something like this wouldn't be bad. So that would be a target, and that would coincide with a 127.2 fib extension around 82.50s. Okay, so let me just do this. That would be my second target, and I'm pretty convinced if we can get to the first one, we'll get to the second one. All right, let's look at some other pound crosses. Aussie. Since I'm expecting a bit more Aussie strength, I'm not really liking this pair. This, you know, this has hardly moved in 2 weeks. So I don't know. It's just gonna be dilly-dallying around here until there's really some real pound strength to overcome the excuse me, the Aussie strength. The same with CAD, and CAD is like, you know, a bit of the wild card, even though I think that it's still gonna go down. Maybe this move on Friday, maybe it was premature, I don't know. If it is, because this level here, you just gotta have a long here. That's all there's to it. You know, 100 pips stop. If it's still gonna, you know, go sideways for a few days, that's fine. Then it will test the old fork again here, and once we get above this, it should get going. So all the pound crosses actually look good, but very difficult to play. And usually, you know, whatever the catalyst is, there's always a possibility of a spike down and then a move up. So be careful playing this. Then let's look at some Euro crosses. EURNZD. You know, this has been a beauty. I told everyone, you know, get at least a small long around 156. I hope you still have it. This thing is gonna go. This is gonna go. No ifs and buts about it. I really think 170 is in the cards. So that's another 900 pips from here, and we're already up 400. So just stay long this one. And EURUSD. Still has a bit to go. I actually missed it because I was thinking, oh, you know, with this, I think I drew this at some point. I thought, oh, it's not gonna break this trend line, but it did, and RSI has been bullish, so probably gonna go up some more. And if this breaks 154.64, then there's a lot of upside still. EURUSD should have kept what I bought here at 140 in April. I didn't. Okay, I think we covered everything. It's been, I don't know how long it's been, 45 minutes. Okay, wow. What else? Let's quickly look at daily oil. Oh yeah, and silver and gold, we have to look at that. So yeah, I'm bullish oil. I'm just bullish oil for a number of reasons. I won't go into that, but oh, this is the wrong oil chart. I got another one, the FXCM one. So you see the targets here. 150.69 is a level, aside from the fib extensions, obviously, and then we got this fib extension here coinciding with this sliding parallel, which was support for a long time, and then we tried to break through it, above it, and then the breakdown, and at some point we're going to have to test that again, and I'm thinking it will be around this 161.8 extension. It's 52.14, which would come in, you know, beginning of September. You know, September is gonna be the month. The debt ceiling is gonna loom large, and if they really can't get anything done, you know, to lower taxes, what has been promised, and the wall is not going to be built, and you know, everything is going to fall to pieces. So, you know, dollar weakness obviously with oil would play a role too. Yes, then silver. Let's look at, yeah, let's do a monthly for silver too, and go down to a weekly and a daily. So yeah, this spike down, right? It's still here. The comics, the futures, there it's gone, but I'm, you know, this messes up, just messes up charts. So we're on our way to have a second up month, and we're right at the 10 MA. I actually sometimes put the 12, or I change this to the 10. So if we can break this and close above the 10 or the 12 MA, because I like 12 MA too, this thing is going through the roof. Excuse me, let me drink some. All right. This thing is going through the roof. So if you have silver, keep it. You know, you could be looking at yeah, the deal of the decade, in my opinion. Let's look at a weekly. So I kind of got a fork here, and a median line target coupled with a old fib would be 22.15. So that's $5 from here. That's that's like 30% return if you buy here, or more if you bought lower. So yeah, keep it a daily. We could pull back a little bit before we go higher. You know, if we retest 1690, yeah, but we actually did that on Friday. I'm gonna consider, I'm actually considering this to be the retest of the breakout that we had here, and we went higher and we closed above the 200 MA, even though we didn't really you know, have a positive day close, but we closed above the 200 MA. Excuse me, got a frog in my throat now. So yeah, look higher. And let's have a look at gold. And I wanted to show also the strength of gold actually, but you can't really see that here against the dollar, because everybody is just gonna assume, oh yeah, it was dollar weakness, right? But if you look at gold in euros, we are actually up for the month, and you know, euro's been going up this month, right? So it's actually gold strength too, because we've been going down here, and we're actually gonna put in, hopefully, well, what I think is an up month. And I took again the wrong one, because I drew something here. Nice channel, right? We turned before the channel. RSI is turning up. If we can get above 50, you know, if gold can go up with euro strength, then gold in dollar, you know, gold versus the dollar is going to go up double as fast, right? So that's what I'm thinking. Let's have a look at the weekly. So we're breaking the upper parallel again here. We went above it, below it, above it, below it, and now we're gonna try to break out, to really break out to the upside. So 1325 is the next target, a close above, and then 1451 is something that I've been eyeing for, yeah, for months, for more than a year already. So that would be nice. A gold breakout. I don't know what the catalyst is going to be. Is it just, you know, the normal swing of things? If inflation is coming back and gold is still the inflation hedge, yeah, then so be it. What we do have here is, if this fork, and that's why it's in a little bit gray, we've reached the median line, so that could give a bit of a pause. It would have been better if we just, you know, zoomed through the median line, but we didn't. So that could give a little bit of a pause and pull back 1285, you know, 1276 to 85. Keep that in mind. That would be, those would be good levels to add or you know, buy again for 1325, because that's where it's going to be at. What else? So we looked at oil, we looked at maybe we can have a look at platinum. So we really nailed that one. You know, from 908, it's been relentless. It's been going up like crazy. Target right now is just this fib. I think on a, was it on an hourly? Let me see. Yeah, so I stopped posting it on Twitter because I don't really think that anybody is in this thing. But as you can see, well, let's wait until TradingView. So I haven't updated this chart in a long time, but you know, my little circles that were the targets, obliterated. We're just, you know, we're just going vertical. And if we look at this, let me put, you know, this would be a level to look at, which is 1019. So that would be something. The upper parallel, obviously, to, you know, and coupled with a level here, resistance, support here, and then we you know, drop down here. So that would be a nice level. Another level first is 1000, which is a psychological level, obviously. Anyway, so platinum, in my mind, is already setting the tone for the other metals, and especially gold and silver. If we want to have a quick look at copper, copper still has a little bit more to go. Also running nicely in the fork, 50% retracement at 306. That would be a nice target in the next few days, actually. So, or this week. And then a bit of a pullback, and then I drew the pullback here. I don't know. I think it's just going to be here, back to the median line, and then we still go higher. Okay, so I'm gonna wrap this up now. It's been 57 minutes. If you've been listening to my rambling for an hour, then congratulations. I can't get anybody else to do that. Have a great week trading, and as you know, we're always here to answer questions if you want charts updated. I just wanted to, I just have to say, you know, if you go to the site and you want to have a look at a specific pair for my charts, you know, it's just fractals&Forks.com, and if you want to know the charts of the pound, you just put the currency pair here, and you know, the charts will come up. If they're not updated, oh, I gotta get rid of this. This is old. So just look at the forks, right? So if the charts are not updated, well, first of all, you have to refresh your browser. If they're still not updated, then delete your cache. If they're still not updated, then I'm a slacker, and then you can tell me on Twitter, hey Mark, go update this and this pair. All right, so just so that you know, it's really easy. You don't have to go into the menus, or well, if you don't want to, but you just type fractals&Forks.com / and then the currency pair, and then the charts will come up. All right, that's it again, and now I'm really going to wrap this up. So thank you for subscribing, and I hope we're doing a good job to help you with your trading, and that you're making some pips. And again, any questions, just let us know. Have a great week, everyone. Bye bye.